Hi everyone, I am Karan and welcome to Karan's Gan. Today I'll share my opinion and my analysis on SL Propack and would give you SL Propack's quarter one results. So SL Propack according to me is a really good share for investment if you want to look at a long term period. And I would tell you about SX Propack's business, its clients, its results, its segments and everything about SL Propack, and finally about its promoters, which I feel is the best part of the share. So let's dig into SL Propack. So what does SL Propack do? So SL Propack has a business of manufacturing tubes. So you must have seen these tubes. These tubes are in your toothpastes, in your ointments, in your creams, in your personal care products, in your medicines, and whatnot. So SL Propack is basically the world's largest laminated tube manufacturer, and it has specialty packaging in FMCG and pharma space. So as you know, pharma and FMCG has seen a really good rally these days, while the packaging front of these companies haven't seen that great a rally today. I'm showing you the packaging front of these FMCG and pharma companies, and that's SL Propack. Just so that you know, if you use a Colgate toothpaste, the tube of Colgate toothpaste is manufactured by SL Propack and it's delivered all over the world. So, what is a laminated tube? Alright, there's a word given called a laminated tube manufacturer. So, just so that you know, if you look at a tube, if you look at a toothpaste tube, it's not just plastic. There are several layers to it. It has a top layer of polythene, which is given as P here. Then it has some adhesive. Then it has some form of middle layer, which is used as a temperature gradient. What I mean by temperature gradient is it is used for protection against severe temperature changes or severe change in the climate. So EVOH is basically that layer which protects the material inside from severe temperature changes. Again, there's an adhesive and there's a polythene layer inside. So basically there are three layers inside. Sometimes aluminium is also used. It depends on what is being packaged. So if a medicine is being packaged, most probably aluminium would be used, whereas if toothpaste is being packaged, some other material will be used. So it's basically different layers to it. So this is pretty much it about the laminated tube. Now we look at its clients. As we can see, the clients here are Colgate, P&G, Hindustan Unilever, GSK, L'Oreal, Patanjali, Mami, every other company, every FMCG company. There's a British company called Tesco, Amway, ITC, Zydus, Cipla, Dr. Reddy. So every health company that you know, healthcare company, FMCG company, and of course Colgate. Now, just so that you know, it is basically the largest laminated tubes manufacturer. Like I told you before, it made 8 billion tubes this year, which is quite a big number. It is a global leader in oral care. By oral care, I mean, packaged tubes for toothpastes. It has growing presence in personal care, and it has an excellent ROC. So ROC is return on capital employed, and it has really good operating profit margins. It has a global footprint. It has 20 plus factories in 10 plus countries. Now we look at the result. So results pretty much are really good. I am not giving you the net profit here because I'm not considering exceptional items. There is an operating profit here. So let us look at overall results. So if I look at quarter on quarter results, the revenue has increased by about 7.64%. So have the expenses. However, the operating profit is about 77 crores compared to 68 crores last quarter. If I look at year on year basis, the company has done phenomenally. I mean, hats off to this company, hats off to the management. I'll get to the management part of it because it is the management that has caused a turnaround in this company. So stay tuned till the end of the video. So if I look at operating profit has increased by about 73% year on year basis when I compare June 2020 results to June 2019 results. Revenue from operations again a 17% growth. Even expenses have bloated, which is pretty normal looking at the scaling up of operations. So the company is actually in 10 plus countries, like I said, and so it is in Africa, Middle East, South Asia. So the countries that they're operating are India and Egypt. In East Asia, they're operating in China and Philippines. In Americas, they're operating in United States of Americas, Mexico, and Colombia. In Europe, they are operating in United Kingdom, Poland, Russia, and Germany. So, as we can see in the Africa, Middle East, and South Asia section, the region-wise revenue is pretty stagnant. I won't say there's much difference. It has kind of ramped up its operations in East Asia. So East Asia, I mean China and Philippines. Last year it had 138 crores revenue from East Asia, and now it has 202 crores revenue from East Asia. So a good jump in East Asia. Again, Americas, it's pretty stagnant in US, in Mexico, and in Colombia, stagnant revenue. In Europe, I would say it is building its business in Europe, in UK, Poland, Russia, and Germany. It has considerably, and consistently been increasing its revenue. So this is about region-wise revenue. Now we look at the segments. So it basically operates in two segments, like I said, personal care. In personal care, I'm talking about beauty, cosmetics, pharma, and healthcare. These are beauty and cosmetic products. You can see the tubes here. So this is exactly what I'm talking about. This is called laminated tube. So this is laminated tube for beauty and cosmetic products, laminated tubes for healthcare and pharma products, and of course, for oral care you got laminated tubes again. So just look at the market. Like, laminated tubes are so common in our industry, be it healthcare, be it cosmetics or beauty, and especially oral care, that we don't realize that our life pretty much cannot be fulfilled without these laminated tubes, I would say. Now we look at the revenue by like by segments. So 51% of its revenue comes from oral care, and the 49% of its revenue comes from personal care, 28% from beauty cosmetics, 16% from pharma, and 5% from others. Now like I said, there are two major segments: personal care and oral care. So let us look at oral care. So it still has continued leadership in oral care. Now, if I see in 2010 or financial year 2011, I see about 58 crore revenue came from oral care. Like I said, these figures are in INR, Indian rupees, millions. So about 58, I'm sorry, 582 crore revenue came from oral care. Whereas, if I look at right now from oral care, the revenue has come out to be about 138 crores. And similarly, if I see in this quarter, a good 33 revenue has come up from oral care, and that's prominent customers are Colgate, PNG, Unilever, GSK, Patanjali, and this is an East Asian brand, which is a pretty prominent brand in East Asia, China, and Philippines. Dabur, of course. Now looking at its personal care products, so it has significantly ramped up its operations in personal care products. So if I look at personal care products, in 2010 it only had face care products, but now it has expanded its products in personal care to face care, hair care, OTCs, over the counter medicine, prescription medication, food, home sanitizers, eye care, hand cream, and whatnot. As of now, it is pursuing care and hand cream, but it recently got into hand sanitizers, and this is pretty much the face of hand sanitizers packaging, if you know. Again, its contribution of personal care to the revenue has been increasing. So apart from pursuing oral care, which they are already a leader in, they want to be a leader in personal care products, which shows the management is doing whatever it takes to be a market leader in this segment, and it is already a market leader, like I said. So the sky is also not enough to them, it seems. Now, like I said, this is the most important point about this company, because whenever you're looking at a company, you should not look at its business prospects. You should also look at its promoters, you should also look at its management, you should look at how strong the management is. And in this case, the promoters are the Blackstone group. So if you know, Blackstone is an American based company. It's an investment firm, and it's world's leading investment firm. And it likes to create positive economic impact and long term value for their customers. This I have copied from the Blackstone's website. They invest in communities and in companies. And basically, I would call Blackstone a turnaround company, because Blackstone, as you know, Blackstone acquired Essel Propack in 2019. But it wasn't the only company that has been acquired by Blackstone. Blackstone acquired MphasiS in 2016, and that time MphasiS used to struggle. It was basically a struggling company. It was a loss-making company. It was losing its clients, and when Blackstone acquired MphasiS, it basically became a turnaround story. And MphasiS is doing really well these days compared to what it was doing earlier in 2016. And Blackstone basically has a management. It's a strong company, it has a good business acumen, as I would say. It leaves business in the hand of professionals. And MphasiS was basically destroyed by its promoters because they weren't able to grow their business. Whereas when Blackstone acquired it, they set up their own committee, they set up their own board, and they set up their own management. And the management was specialized in this field, and because of which uh, promoters, Blackstone as a company, changed MphasiS into a turnaround story. So just so you know, Essel Propack was basically a part of Essel Group. And Essel Group promoter is Subhash Chandra, and Subhash Chandra was saddled with debt. He had a lot of debt, his companies weren't doing well. So when they acquired from Blackstone, they acquired in 2019. So these are the figures I would like to show you. So they acquired in about 2019. So before this period, I would say it was being operated by the Essel Group. So Essel Group had a lot of debt. It had about 700 crore debt. Was 7,000 million debt. And this Blackstone's management, it reduced the debt drastically, and now its debt only stands at 248 crores compared to 700 crores about 4 years ago. And prudent capex spend. So this capex spend, I would say, it's capital expenditure, how much money they're spending on the business. So the capital expenditure has dropped drastically, so they're not spending a lot of money on the business, and they are reducing the debt of the company through the cash flows and using the same cash flows to grow the company. So this point has to be thought on, that the management is doing so well, it is utilizing the cash flows of the company, it is utilizing the profits of the company so well that it doesn't need to invest more money, and it is reducing its debt. Moreover, its ROC is being increased by a huge percentage. By, like I said, ROC is return on capital employed. So return on capital employed is, if I am investing 100 crores in a company, and my company's profit is coming out to be 10 crores, so my ROC would be 10%, because I invested 100 crores in the working capital in my company, and my profit is coming out to be 10 crores. Only 10% is my ROC. Whereas here the ROC is increasing. That means they are able to turn out more profit by lesser amount of cash investment. So the ROC has been drastically improved from 16.9% to 20%. So this is the magic of Blackstone Group, and this is the magic of promoters. Now I'll look at the share price of Essel Propack. So Essel Propack is basically trading at about 205 rupees as of now, and Essel Propack, if I look at 1 year period, Essel Propack had a high of about 2 to 5 rupees, and 5 year period, again, it, you look at this curve, it has been increasing except this crash below, which was uniform due to coronavirus. It has been, increasing at a good pace, and this is a good sign. If I look at a max period, I see, SL Pro Pack is doing really well. It has a price to earning ratio of 31. It has a dividend yield of 1.60, which isn't bad for a company like SL Pro Pack. Price to book ratio is 4.20. So this is basically because the market also acknowledges SL Pro Pack to be a premium product, and that's why it has allotted high PB ratio and high PE ratio to SL Pro Pack compared to the other shares in the sector. You know, and this is pretty much it about SL Pro Pack. So to you people who want to invest in SL Pro Pack for a duration of at least 5 years, this is the share to go. It has a decent dividend track record, it has an excellent business, it has, a really good management, it has excellent clients, and it is in a product where it basically has the, you know where it basically is a global leader, and is still striving to look at different segments in that business. So guys, this is my take on SL Pro Pack, and I hope you like my video. Thank you very much. Have a nice day.